over 55% of non-investors don't think they make enough money to invest. I was one of those people. Just a couple years ago, we barely had any net worth. In fact, we were negative in our net worth because we had so much debt between our cars, our house, and credit cards and student loan debt. But I got so tired of not having enough money at the end of the month to enjoy things that we love. I want to be able to go to sleep and wake up the next morning feeling refreshed and not stressed out about money. That to me is living my ultimate sweet life. And on this channel today, I'm sharing with you how I went from there to now a $70,000 portfolio and why I find investing so exciting, even though to some people it sounds a little bit boring. In this article by Yahoo Finance, Go Banking did a survey where 55% of non-investors think they don't earn enough money to invest, and that's the primary reason why they're not investing. But that 55% is what's really interesting to me, because what I wasn't aware of back when I was first starting off is that even with all the turmoil that we've seen over the years, such as 9/11, the banking crisis of 2009, the coronavirus pandemic of 2020, and all of the other recessions well before our time, is that the stock market in the S&P 500 has grown at an average rate of 10% per year. So even with all those crashes, it maintained enough to grow at an average rate of 10%. And now I look back and I'm like, well, wait a minute. My raises were only about 2 to 5% a year. My savings account's only paying me 0.4% per year. Maybe I need to do something with this. So the first thing we started doing is paying off debt. But then it got even more exciting once we were out of debt to start putting money into investment. Now, it's not like the old days where you had to pay commissions and all these other things. I started with things like Robinhood, Webull, and some of those other fancy investment apps that actually have commission-free trades, and they're actually free to download and relatively easy to use. So today, I want to break down my $70,000 portfolio and what my future plans are with my money, and my goal with this video is to help inspire you. Now, this video today is brought to you by Skillshare, but more on that a little bit later. Now, I've said it before, when you invest in things like dividend stocks, every time you buy another share, you're essentially giving yourself a raise. And the reason for that is because every time that you get one more share, they pay a certain percentage of their profits in the form of dividends for every share of the company or the stock that you might own. And that's why I say every time you buy a share, you get a little bit more money. You buy a second share, a little bit more money on top of that. And that's outside of the growth that happens over the period of time that I mentioned earlier with that 10% growth on average. Here we are on trackyourdividends.com. Now, this is a free website that you can use. Hop over there to that website, sign up for an account, and you can plug in your information manually, absolutely free. And that's exactly what I've done here. So here we are, currently at a $73,000 portfolio, and you can see that little green is $9,895 worth of growth. What that means is since the moment I started investing, I have grown my money an additional $9,895. But I'm going to break this down. First thing I want to pull your attention to on Track Your Dividends is this dividend yield. Now, this dividend yield is 3.5%, which means for all the money and all the stocks that I own, I get a yield of about 3.5% in dividends, which means my annual income at the current moment is $2,570 a year. Now, a lot of people are gonna be like, well, that's not a whole lot of money to live off of, but that's not my goal at this moment. Still kind of young, and I'm still starting off with my investments. But as time goes on and we get a little bit older, I'm gonna start focusing heavily on dividend stocks to get that annual income higher and higher. You know, some people actually live off of dividends, whether they make $60,000, $80,000, $100,000 a year in dividend payments. You can do that too by starting today and staying consistent. Now, for those of you who have been following me for a while, you might be like, wow, okay, the last update you did, I think you were around 50,000, right? You're absolutely right around 50,000. So we've grown another 20,000 because I've been investing more money as I go along. On top of that, I did move out of some dividend paying stocks and focus a little bit more on growth. The reason for that is because we are still young, we have a long time trajectory in order to go up, and we want to ride the wave of growth. Sometimes when you focus only on dividend stocks, those companies are paying out based on profits, but they're not innovating as much as some of these other companies. So what you can do is focus on growth companies and ride the wave up, up, up as they continue to grow and expand. Things like Apple, Tesla, and some of those other companies that have a lot more innovation and a lot more growth potential. In fact, we just talked about the metaverse. That's a whole different technology coming down the pipeline that could really take some awesome growth to a whole new level. But if you're older, let's say you're 50, 60, 70 years old, you're watching the channel, I appreciate you, welcome aboard. You may want to look more toward that income producing activity, which means you want to focus more on dividend stocks instead of growth stocks. If you're not really sure where to begin, make sure you subscribe to the channel. I do put a lot of video content on everything personal finance that can help you build your portfolio to the next level. So how did I earn some of this money? Well, I'm very focused on doing things outside of my normal 9-to-5 job. Things like we call side hustles. And yes, YouTube is certainly a side hustle. In full transparency, it is producing me lots of extra income. That is cool, but it also takes a lot of work. I also do things on the side, such as Amazon Flex, usertesting.com, and some of the other side hustles that I've shared with you in my prior videos here on the channel. I'll link them in the description if you want to check out and get some ideas for yourself on side hustles outside of your 9-to-5. And I think that's a great way to start. Get some extra income that you weren't expecting in the first place. Once you receive that income, turn it around and put it into the stock market. Then at that point, it's not really money that you were expecting anyway, and it doesn't matter if it drops down. You can let it continue to grow over time. Now, if you also want to find a way other than the side hustles that I mentioned, here's a great way that you can up the ante. You can go to something like Fiverr and get yourself skilled up to learn a little bit more about how you can grow your ability to sell a service. So for example, let's say you want to do some graphic design and you want to share maybe some new thumbnails for YouTubers and you want to get better at Photoshop. Maybe you don't know a thing about Photoshop, but you realize that if you go on Fiverr, you could make a good amount of money designing thumbnails for people's YouTube videos. Well, here's how you could do that. You go over to something like Skillshare. Now, Skillshare is an online learning community with thousands of inspiring classes for creators. You can explore new skills such as, for example, photo creation within Photoshop. Learn all about it, skill yourself up, and then what you can do is take that knowledge, apply it toward a Fiverr gig. People pay you $5, $10, $20, whatever price point you set, and then you deliver that thumbnail or that graphical design to the person, to the end user. Now for me personally, I am still going through and absolutely loving advanced video editing with Jordy Vandeput. It has a ton of content within here, but what's really cool about this is that he provides in-depth information on Premiere Pro, and that's how I edit my videos here on YouTube, so I can get better at producing a little bit more flair for you guys, because you guys deserve it. Here's the best part. The first 1,000 of my subscribers who click the link down in the description below will get a 1-month free trial to Skillshare so you can start exploring your creativity today. Click the link below, check it out, use it for free, turn it into an income producing activity, and come back to this video, comment down below, and let me know how you're doing. So you can see within Track Your Dividends, that's my overall summary, and then you can see all the different accounts that I own. Now, because I review investment apps, I tend to use them because I don't want to do reviews on things that I don't personally use. So I have Public, which is another great investment app. I have Robinhood, I have Schwab, I have Stash, and I have Webull. My biggest account, I believe, is within Webull, and then my second biggest account is my Schwab account, and then the rest kind of go from there. I also do have an M1 Finance account, which only has about $100 in it, and then I do have my Roth IRA, my traditional IRA, and all that other stuff, and that's completely off this particular grid. What I'm sharing with you today is only my actual brokerage portfolio. So let me break it down step by step. First, we got Public. Okay, now in Public, we got a $215 balance, a yield on cost of only 1.19%, only annual income of $2. So I don't have a lot yet invested into the Public app. I got Apple, Amazon, Starbucks, SPY, and VTI. And you're gonna see a lot of these repeat throughout my different portfolios just because I enjoy buying in these type of funds, just because they're awesome. Within Robinhood, I have things like Apple, Bank of America, Google, Sharpe, Mattel, and AT&T. By the way, yes, I still have AT&T even though they are cutting their dividend and they're going away from Warner Media to only focus on the telecommunications business. We'll see how it goes, but I'm just enjoying the ride with that one. Now, where things get serious is in my Schwab account. And I have videos on this particular fund, but this is where I make most of my annual dividend income. Here we have a total of $2,127, specifically within my Schwab account. And the reason for that is I'm invested heavily into things like QYLD, RYLD, and NUSI. Those particular funds are covered call option strategies that pay distributions every single month. And because they pay so well, some of them up to 11% dividend yield, that's where I get most of my income. So you can see, for example, I got 461 shares of QYLD, and because that pays every single month, I'm getting, I think, around $99 per month. Now you might be like, why are you doing that? Well, that one particularly for me is extra money that I have. When we had the pandemic and we were all quarantined, I started saving a ton of money. So right now that's just extra cash that I have in preparation for a future big mortgage payment that we're going to be making. But in the meantime, I'm stuffing it into here and enjoying those incredible monthly distributions. And then we have Stash, which is up about $824 for $45.69, and annual income of only $40. And then last but not least is my Webull account, and that's the big one at $40,000. The reason that one's up so high is I do have a cryptocurrency within this particular account. Webull does offer the ability to buy cryptocurrency. Most of my crypto is within Coinbase, and it only represents about 10% of my overall portfolio. But within Webull and here, I do have some of that Shiba Inu. You may have seen that talked about here on the channel before, but that is up over $5,000 because that is certainly going on a bull run right now, making up most of that gain at the current moment. But again, I still got my very conservative investments like VTI, which tracks the total stock market index. I think if you're a beginner and you're wondering, what should I do? If you find things that track a market, such as the total stock market or the S&P 500, that could be a great way to get started for your investment journey. The best part is up here at the top, upcoming dividends. This one's a lot of fun because every single month you can see how much you're expected to get paid out. So November 2021, I'm expecting about $193, followed up by December, $270. The reason it goes up in December is there are certain stocks and certain ETFs that pay you quarterly instead of monthly. That's why every 3 months you see a little bit of a spike in my upcoming dividends. And if I scroll down here, it'll let you know exactly what is paying you on what particular month. This is a super awesome benefit. Let me close this ad here at the bottom. But you can see right down here, as I mentioned earlier, you got NUSI and QYLD really pumping the boat here. $60 total dividend in NUSI, $99 in QYLD. And remember, if I reinvest dividends, which means I don't take that $99 and use it, I instead reinvest it back into the company. That $99 this month will become a little bit more this next month right here. It'll have a little bit more shares to generate additional dividend revenue. Now, I gotta be honest with you guys. I plan on going a lot more bullish, both with my brokerage portfolio as well as my cryptocurrency portfolio, but not until we pay off the mortgage. So you may not know this about me if you're a new watcher to the channel, but we are going all in on paying off the mortgage. The reason I want to do that, even though I understand that investing could gain me a lot more money than paying off that kind of debt, I like the idea of not having any risk. So for example, let's say the pandemic type of stuff happens again, or there's a financial meltdown or something crazy happens, stocks fall, everything's going to hell and everybody's afraid. I want to be able to say, you know what, if my income goes away, if I get laid off, or something bad happens, my biggest expense, which is my monthly house payment, doesn't exist anymore. So we don't have to worry about getting kicked out of the house. We just enjoy our life. That's why I'm going all in on that. Now, once the house is paid off, get ready because this channel is about to light on fire with some additional focus on future investments. But remember, everything here is not financial advice. I'm just some guy on YouTube who sometimes looks like Woody from Toy Story. But if you enjoyed this video, make sure you like and then check out this video next on QYLD, as well as the taxes behind QYLD if you're looking to really up your dividend game to the 10% dividend yield or more. And until next time, we'll see you on the next video.